Okay, sorry for the delay there, guys. Welcome. Today is Thursday, October 29th, and I'm Michael Boutros, currency strategist. Welcome to this SB Intraday Strategy webinar. Looks like we just got the third quarter GDP release for the United States coming out slightly weaker than expected. We were looking for a print of 1.6% annualized quarter on quarter, came in at 1.5. Personal consumption also slightly beat estimates. 3.3 is what we were looking for, came in at 3.2. GDP price index and core PCE also just shy of expectations. Not a major market mover here, but certainly the dollar is at highs, is at resistance. We'll take a look at that in a moment. And we'll also review the post FOMC volatility. If you have any questions about yesterday, guys, now's the time. Feel free to throw them on the message board. Any pairs you guys are looking at, be more than happy to take a look today. Look, they were less dovish about the global economy and slightly more hawkish about the domestic economy. And that's basically what the markets took from yesterday's release. December, as it stands from the language, remains on the table. And you saw the dollar take a nice step higher. Now, some of the bank research that we've been following and some of the other things have been suggesting that people have been bringing in those interest rate expectations, which were as far out as June of last year, starting to come in back into March. Irrespective, you did see that take the dollar much higher, and we are testing resistance. So here's the dollar index on the 30-minute chart. You're not seeing too much volatility on that move. Certainly, if we do see a move lower, we highlighted this in yesterday's radar charts, we'll be looking for near-term support near 12,071. That is pretty darn close to the open of the month, and more importantly, it's going to be those that high day reversal close. Let me just bring up dollar index for you real quick. So the high day reversal close from April, subsequent to the high that we made for the year, came in right here at 12,071. That's basically a reopened October trade and should be near-term support here for the dollar index. Still looking for a possible pullback off this region. You know, we were unable to close above the September high. Momentum, as I noted yesterday, is still holding sub 60. We've been holding 60 ever since the highs of the year. Actually, before the high of the year came in April, we were still holding 60. Last time we saw a above 60 print in momentum was back here in March. So price for the dollar index remains at risk while below this region. Obviously, if we plow through, you're looking for the high day close, 12,123. You're looking for the stretch highs of the year, 12,162. But the immediate risk is for a pullback from this level. So keep your eye on that 12,104 level, that high from September on today's close. And again, there's that 30-minute. We'll see if that gives us any. So let me take a step back. Here's what the 30-minute looks like on the near term. Okay. And in fact, someone deleted one of my trend lines here. But in fact, if you take that trend line support just off the lows, okay, and you extrapolate that to the swing low that you made here on the 13th, you can see it's catching pretty much that swing high for the beginning of the week and the high that we made yesterday. There's that September high. Just higher, as we noted, is the high day close, and that might be a better region. I would like to initiate a little bit more of an aggressive view if we get up there. The high day close for the year, confluence with channel resistance, that comes into the close of session here today in New York. All right, the reversal needs to be sub 12,029. So if we need to get back below that trendline support to mark a larger turn here in the dollar index. Any questions on the dollar index? I'll also draw your attention to this. We kind of removed this from the daily charts to clean it up, but if you remember, guys, we were following this slope for months and months and months on the intraday charts. You can see really nice pivots along that slope, and the former lower median line parallel, again, looks like we kind of caught that stretch high that we made yesterday on the release. So what does that mean for our dollar crosses? Well, obviously, we've been following the Kiwi. We've been following dollar CAD. Dollar CAD actually deviated with a really nice move yesterday. We'll go over that. You saw recovery of the larger decline that we were following, but we're still tracking for a short entry. So I haven't given up on that yet. Euro yen, I am looking lower. I think I might have just missed my entry as I was opening the webinar. Yes, it does seem like that's exactly what's happening. So here's Euro yen. We'll go over this in a moment, but there was a trigger I was looking for right ahead of the open here. It looks like we're getting it. So Euro yen shorts also the favored play from yesterday's radar charts. All right, let's jump right into the report. So first things first, Aussie yen. Really interesting setup. We highlighted this on the radar charts early in the week. Aussie yen was coming into a major area of influence. Largely the confluence there of trendline resistance, or former trendline support rather, now resistance, and then those swing highs from September that we started off the weekend. Here's what Aussie yen looks like on the 30-minute now. Okay, so a break of the weekly opening range into that resistance level. Shift the bias to the downside. We talked about this in this week's webinars, so I don't want to keep beating up this trade, but the dip yesterday broke below 86, 86.13, which was the key support structure we noted. We came into just shy of the next target. There was a 100% extension right down at 85.50. We're going to go ahead and choke that up. Yesterday we brought up to 85.62, yesterday's low, but you can see a defense of that key support continuing to hold. So as long as we stay below the median line, you're looking for short triggers to sell. A breach above this would invalidate the near-term bearish bias, but you'd still need to get through 87 to turn bullish again. So you might have some long scalp opportunities here. We'd start to look back for short entries near 87. That said, you're still looking lower sub 86 right now. 85.62 is going to be the support we're going to look for, and 85.22 would complete a 50% retracement of the entire advance. Keep in mind on the daily chart, the slope that we've been following here as well is sort of catching the lows for the entire latter part of this month. So if we take this back to just basic trendline support from the, the August lows of last year, again in October, again on the complete drop-off that we saw in August of this year, we mirror that same slope to the September highs. You can see support here in December, support here in July, resistance here in September, and here we are again October testing it as support. So not surprised to see this holding a little bit here, kind of hanging around, unable to make the downside move. Like I said, you might see a little bit of a pull higher here, but we're looking to sell rallies. We're looking for short triggers in momentum. Haven't gotten any since that break. What was that? I guess last night. We haven't gotten any real short triggers to work with, so we'll be looking for a rally here to sell in Aussie yen. Downside targets 85.22 and 84.80. Note that 84.72, just below our scalp target, is actually going to be the low day close for the year. Okay, so the low that we made on August 24th specifically comes in just below that scalp targets. And remember, when we're looking to trade these guys, all the targets that we do put on the scalp reports are always going to be inside targets. So if there's a major low day close or a major high day close or a moving average, we'll put the scalp targets typically a couple pips on the inside. Any questions on the Aussie yen? A little bit of a snoozer and overnight trade, but still one of the best directional breaks we saw all week long. Chris says, good morning, Mike. Can I get your anchors for Andrews on Aussie yen, the 30-minute? I like how you stated that, but I got you, buddy. Here's what it looks like. So you have the high from October 12th, the subsequent low from October 22nd, and the subsequent high from October 23rd. Okay, it's interesting because when you remember, guys, we started off the week, we don't know if this pitchfork is in play. Okay, we draw these pitchforks as a preliminary guidance for a price. Once we see price reacting to it, then we have conviction to actually use the pivots on our against our trades. So it just so happened that a basic 236 retracement, or extension rather, excuse me, off the high was right there near the opening range low for the week. So we broke that, tested it as resistance. That's the tell. You're still not 100% positive on that median line, but then on this dip, rebound and break, added validation to using this slope. Okay. The bigger one out here, Chris, is there's a couple. I know this looks kind of messy, guys. I hope it's not too messy, but you have this one right here, which is off the lows from September 6th, September 17th, and September 28th, or actually, excuse me, 29th. And that gave us the break and test of resistance, which initiated us starting to look for shorts to begin with this week. Okay, so this is why we were looking for shorts to begin with, because we broke the upward sloping median line parallel. We were checking the underbelly of it as resistance. And then once we saw the opening range break for the week, that's all the tell you need to get the play and the directional bias. Chris, does that help? There were a couple of embedded pitchforks that we were also playing here that gave us conviction when we came off the median line of that larger structure. And that was a real conviction turn there. So just a beautiful setup. Just a beautiful setup. I didn't get anywhere near as many scalps out of this as I would have liked to. It's just been a really hectic week here at SB with the Fed interest rate decision and everything going on. So we're still looking lower sub the median line. Even if it breaks, you'd expect a rally towards 87. That's going to be the bearish invalidation level. Chris says, very much. Thanks, Mike. Anytime, man. Great to see you in the room. David wants to look at Euro Oz. Let me jot that down. We'll jump into it as soon as we get through these pairs. David, remind me just in case I forget, okay? But I put that down on the list there. So that is Aussie yen. Next up on tap was dollar CAD, and certainly drawing a lot of interest with everything that's been going on. Okay, here's what dollar CAD looks like on the daily. And here's what we look like yesterday. So if you guys recall, this was also on the radar charts the previous day. We were talking about this major resistance up at 132.83. The ideal scenario was actually going to be a rally just higher, but 132.83 completes a 1618 extension off the low. And on the daily chart was this upper median line parallel. So you had the upper median line parallel there. You had the current operative ascending median line parallel there, okay? And then add to that you're coming up on that 1618 extension. So you're looking for the turn. You got to break sub 32.17, which was the initiation of the short bias that took out targets into 131.50. And then this was the next target, the median line we broke through, but a sliding parallel off that swing low from Friday of last week. Caught that to the pip. And then on the recovery on the FOMC, obviously momentum made it right back above 30. It's still at risk for a pull lower, okay, while below 32.83. It's possible that we'll go check this, sliding parallel, which broke as support as resistance. But in long story short, I'm still looking for short triggers here in dollar CAD sub 32.83. Here's what the intraday chart looks like now. All right, so we moseyed on up a little bit towards that 32.17 level. Again, that's a key 618 retracement, so you're seeing some nice pivot structures around that. But we're looking for short triggers on the way up. Momentum holding 60. We should be holding shorts actually right now in dollar CAD. Here's what the intraday chart looks like. And of course, euro yen's taken off without us. That's a messy trigger. I wouldn't have even used that one. But I'd be watching this opening range. This actually looks pretty clean here on the 5-minute, guys. So if you look at the Sydney, Tokyo, London opening range, they all essentially highlight support right near 3180, 3185. And the high, we'll use that London opening range high at 3238 as sort of our guidance here for dollar CAD. There was one thing on tap tomorrow for the loonie, and I do believe it's GDP figures, but let me just double check that. Right, so we do have GDP figures for August out of dollar or out of Canada tomorrow. Should be the next player here for dollar CAD. Okay, basically looking for a slight decrease here to 0.1% for the month of August, slight pop higher for the year on year. and that hits tomorrow at 8:30 to close out the month and the week. I do really want to remind you guys that we are closing out, again, the monthly and weekly quarters are not, and quarterly closes rather, are not typically the best time to be intraday trading. A lot of back and forth in price, portfolio management, or squaring off of positions. Long story short, it tends to be a little bit more of a tricky time period for intraday strategies. So unlikely to take any new positions here heading into the close of the week. I don't think we'll have an update today, but we'll have maybe some new radar charts out as we'll keep an eye on the open of November trade. Any questions on dollar CAD? Honestly, guys, you're going to get a little bit of this hangover effect after such a major market move as we saw yesterday. And again, although we didn't hear much, the fact that the December rate hike is still on the table, you saw them really ease concerns about some of the global macroeconomic issues that they've been citing over the last couple of meetings. So wishful thinkers still thinking we're going to get a rate hike this year. I personally don't, but that's where we stand. All right, so Chris says, sorry, Mike, I had a glitch while you were explaining dollar CAD. Are you looking for shorts there? So I'm looking for short exposure if we do break the opening range lows for Tokyo, London, and basically if the New York opening range ends up giving us a short, I'd be looking to sell pullbacks here. Ideally, Chris, you'd get back towards the upper median line parallel for the daily position right here. Take a short against the highs from yesterday. That would be the most ideal scenario. The bearish invalidation level for the broader trade is up at 33.08. 33.08, 33.11 is going to be the monthly open, a 764 retracement off of the highs, and the upper median line parallel for the current operative structure. All right, so that's sort of what would shift our focus higher, below that region, and specifically below near-term 32.80. I'm looking for short triggers. Does that make sense, Chris? Oops. All right, so that is dollar CAD. Moving right along, want to take a quick look at the dollar index. We did that. Kiwi dollar. Mr. Kiwi dollar had a very interesting day yesterday. Obviously, you saw on the back of the FOMC interest rate decision that reaction, but more importantly, you came right up into the RBNZ. This thing was moving right into just 2 pips away from our swing target, actually, before it ripped right on the RBNZ. They didn't hike rates as expected. You know, Wheeler's known for this type of jawboning, but you didn't get too much of it. You know, we typically hear Wheeler all about, oh, the Kiwi's too high. You know, we're expecting further depreciation, and he tends to put a very soft tone on the currency. We didn't really get much of that this time around, and you saw Kiwi hold support, kind of rebounded right off that 38.2 today. That was 66.44. Momentum has a broader support trigger that's in view at this point. Look, it's a really nice setup in that at the lows that we made, it was a very nice sliding parallel for the current operative structure we've been following since the start of the week. Okay. Again, this was highlighted on Sunday. On Monday. We had a really nice opening range. We were coming right in support, right ahead of the Fed. We noted, look, if this thing breaks 67.40, you'd be looking for a drop towards targets at 66.83 and 66.44. The final target missed by just 3 pips on that stretch, right ahead of, or right at, the RBNZ. Okay, so the rally did sort of shake things up. It looked like it was going to rip right through again. Here we are kind of holding right around that median line. End of story, guys, below 67.40. Last night we lowered the bearish invalidation level to 67.70. At this point, I'd be willing to lower that even more to the opening range low for the week and the weekly open. Okay, so this is the 50% retracement of the decline off last week's high. The weekly open, a broader 236 retracement. This is from the ascent off the lows that you made back in September. And 67.37, the end of that range, is just the swing low that we made here early in the week, testing the opening range low. So as long as we stay below that region, looking for short triggers, again, be mindful of that median line. But now that we've sailed through it so many times, I'd be more so looking at the key lateral levels. Again, 66.44 and 66.18 of interest. So based on where we are in time, just wanted to kind of highlight where the confluences are. That sliding parallel confluence is a little bit deeper here today over the U.S. session to the open right around 66. The lower median line parallel, or the median line rather, of the structure we broke out of earlier in the month, that comes right along that low from October 13th into tomorrow's trading session, tomorrow's U.S. Open. And then the confluence of the median line for the current structure, that comes in just ahead of it, heading into the close of the week. Hey, Chris, no worries. Having some personal connection issues here. Listen to the recording for things. No problem. So, Chris, just a quick recap. I don't want to take too much time, but looking for shorts on dollar CAD while below 32.80 near term, 33.11 break is what we need to get bullish again. So, quick recap there, but you can watch the recording for details. So, any questions on the Kiwi? Opening or the ATR, average true range, is starting to widen out a little bit. So, looking good here. Looking for a rally to sell into U.S. trade. All right, so we covered Aussie yen, dollar CAD, dollar index, Kiwi dollar, ooh, euro yen. And then let's take a look at, before we jump into euro yen, Kiwi CAD. So this is something I've been watching all week and kind of cringing. I got stopped out of a short on this trade earlier in the week. It wasn't meant to be a scalp as much as it was more of a swing type of setup. But look, it was coming in such a key area of resistance that I couldn't help myself. We were one day off. So we initiated a short. I think I talked about this on Wednesday's webinar, or Tuesday's webinar rather, against 89.25. Okay, you're looking at the 50% retracement of the entire 2015 trading range. You look at that swing low and that pivot from December, and the swing highs that we made here in June, as momentum was coming back to check former trigger support, 3-point trigger, as resistance. So try to press a short here. Again, you don't want to ever be trying to call highs, guys. And this is kind of a lesson for patience and waiting for being disciplined to our strategy. We need to see that momentum turn. We need to see those shifts in near-term triggers to the downside to get this going. And we kind of front ran it a little bit, and we played for it, and we missed off on a nice move here. Long story short, here's what it looks like on the intraday chart. Still pretty clean. Still pretty clean. So we talked about the Kiwi on the breakdown there. We talked about the CAD, which has possibly a little bit more upside to go. We're heading into GDP figures to close out the week, so we'll keep that in mind. But this was the setup. You know, we were starting the week just below resistance. This was a short trigger I jumped into. We got jackknife, stopped right out real quick above the highs here. And then just a day later, the breakdown back below that level was accompanied with the first 40 break we've seen for the week. Problem here was that there was no pullback to get back in. Trust me, I watched this one all through yesterday, looking for any type of rebound to give me a high to trade against, to give me an opening range session to trade against. He didn't get it. It just melted lower all the way into the close of U.S. trade. Again, RBNZ charging a nice recovery here. So what are we looking at from here, Mike? We're looking for the median line to offer some resistance. I do like short triggers against or below this region. Keep in mind momentum from way oversold, holding 60. That's exactly what you want to see. So I'm just on the lookout again for some short triggers. A downside move here would target same levels, unchanged from Monday, 87.73. 38.2 comes in at 87.40. We tagged that yesterday. And then I'd be watching this sliding parallel here, determinant on where we are in time. You're basically looking at like 86.90, 86.88. But a very clean structure. Still looking pretty clean. What would put us bullish again? I mean, the entire trade still looks constructive. It's just that you've seen a really heavy turnaround in momentum. The opening range broke for the week. So the risk is opening range break. Look for that Thursday, Friday low in price. And again, the risk is for another move lower here. The bearish invalidation level is the same level we started off the week at. Okay, so the bearish invalidation level is up here, and that's 89.40 into 89.25. Questions on Kiwi CAD. Nice 30 pip ATR here. Another one that's favored by me. This alongside the Euro Yen and the Aussie Yen is sort of my favorite pairs. Remember, I keep kind of bypassing on as we talk about some of these yen pairs we're about to jump into. Still a big week for the yen. It ain't over yet. You do have some data coming out of Japan tonight, the jobless rate. You have the national CPI, Tokyo CPI, core and headline. More importantly, heading into the end of the month on the 30th, you do have the BOJ annual or the BOJ monetary policy statement. So the last time we got them moving was on Halloween, and here we are again heading into the Halloween weekend. So there's been a lot of talk on whether it's going to be a trick or a treat from the BOJ. Long story short, if they do if they sit pat on their hands, you could see some further yen strength. And if you get some further yen strength, that's going to put those plays even more so into effect on the Euro yen short side and the Aussie yen short side. If you see them do nothing, okay, and they kind of sit on their hands, or excuse me, if you see them do something, or they come out and they say we're going to increase the amount of easing, that is going to be yen negative. Remember, at its heart, all these easing measures is just currency depreciation. And as a major exporter, it really is a tailwind for the economy for them to have a weaker yen. So if they do further easing measures and you see some yen weakness, keep your eye on those invalidation levels on Euro yen and Kiwi yen. We'll go over those in a little bit, or Aussie yen rather. But before we do, any questions here on Kiwi CAD? If we do break the median line, okay, if we don't find any short triggers here, and we do break above this median line, a quick retracement off the high will always serve you well in a move like this, and especially when the move encompasses the entire weekly range. Okay, so if we do that right, and one of the reasons that we were talking about that median line sort of being our immediate bearish invalidation was because it was also the 50% retracement of the move. All right. Okay. Graham says, Kiwi Cat just missed a 5-minute trigger against 88.60. Yes, he did. Yeah, I'm watching it too. I'm watching it too. Here's the trigger he's talking about. What can I say, guys? We do the webinar during the prime time. There's no way we can watch all these pairs while I'm doing it. So feel free. As we're going through these setups, if you have the triggers, just check it. I can't be watching all the pairs at the same time. Most of my entries and trading has been the Asia session, just because, again, during these webinars, I missed so many different entries. That being said, it did look like a nice trigger there off the highs, and you look for a little bit more of a pullback here in Kiwi CAD. I like it. I like it. Keep in mind, again, we have to stay disciplined. Okay, so for Kiwi CAD on the downside, you already made a massive drop yesterday. Every 29 pips, you want to be taking something off the table. Okay, bring down your exposure, stops to break even, wait for the next target, and so forth. You don't want to turn a scalp entry into a swing trade, because that's not a proper swing entry. So I just want to make sure everyone's on the same page with this. But it does look good. All right, so let's move on from Kiwi CAD. Went over Kiwi, went over CAD, went over Kiwi CAD. Now let's cover some of these yen crosses ahead of all this data from Japan. So Euro yen is what I was opening the session is. We highlighted this on yesterday's scalp chart as well. I actually put a piece on this on Daily FX. highlighting the broader setup. Euro yen looks like this on the daily chart. And there was a couple of things to keep in mind. First, earlier in the week, not on FOMC yesterday, you did see a break of the monthly open and the monthly opening range low. So objectively, right off the bat, you're looking for that late month low. Okay, today's the 29th. We're at the monthly lows. You could see another drop lower into key support near 131.23. That's sort of the objective. Momentum on the secondary attempt on a move towards 60 failed again. So even though you got this multi-month trigger break, didn't do much. Got right back below it. A support break off of last month's low in momentum took us below 40 yesterday for the first time this month. That's bearish. This week's price action also made a very clean and objective break of the weekly opening range. So you see how many triggers you got pushed to the downside? A lot. Monthly opening range break, trigger break in momentum, weekly opening range break. You're in a nicely formed and well-defined descending channel or pitchfork formation. So this is how we ascertain our bias, and this is how we decide where we want to get involved, where we want to operate in. On a trade like this, you have so many different aspects that are looking lower that we're just looking for short triggers while within this formation. So yesterday when we published a piece on daily FX, we had just come off the median line. We were looking at this support trigger to give us, that was a support trigger on FOMC, but we were looking for support triggers or short triggers while below near-term resistance. You actually did get a support trigger break right into the open of Asia, which took out that last target at 31.80. And then you got, obviously, a move higher and a rebound off that region. Still looking to sell rallies. And right ahead of the webinar, I was looking for a short against this region, which, again, we kind of just missed. But here's what it looks like on the 5-minute. So actually a 1-minute trigger gave out, and that was sort of the ideal entry just right there. Really tight stop would have been 15, 16 pip stop, and you're looking for about 28 pips. You're well on your way there already. All right, so the euro yen still looks pretty good with the bias that we have on the euro, fits in nicely in the broader euro weakness picture. Heading into BOJ, and obviously the other figures that we get tonight, CPI and jobless, if you get yen strength, really could see this thing exacerbated, looking for a major support down here at the 100% extension, 131.23. And that coincides very nicely with the median line heading into tomorrow, basically into tonight. Now, this region I'd be very cautious of having short exposure beyond here, okay? So if we do get another opportunity to get on the short side on a rally here into U.S. trade against the high, I'm not really looking to hold any short exposure past that region near term because of the confluence that we have there. And this is basically a structure that's held price for the better part of the year, dead on with 100% extension. If there's going to be a short-term recovery or a rebound, that's likely where you'll find it. So looking for shorts into 131.23. At that point, you'll be looking to see a little bit more of a substantiated rebound. Listen, if it breaks down, no problem. We'll be looking to sell rallies again towards 129.60 is the next target. You got a lot of room. But on the initial drop here, I'd be mindful into that region. All right. Any questions on Euro Yen? Still one of my favorite setups alongside the Aussie. With regards to the Aussie, by the way, keep in mind next week, if I'm not mistaken, we do have the RBA on tap on November 2nd. There is a expectation that they will actually move on rates. And if we look here, excuse me, this is the Credit Suisse overnight index swaps. It tells you what market expectations are pricing in by way of central bank policy on the interest rate. And if you look at the Aussie, markets are pricing in a 50% chance of a 25 basis point cut. Over the next 12 months, market participants are pricing in 43 basis points in further cuts for the prime rate. So 50% chance next week, and 12 months out, 50% chance for a 25 basis point next week. And 12 months out, they're looking for 43 basis points total in additional cuts. Okay, so with the expectation sort of teetering on 50-50 on whether they'll cut or not, you could expect to see some volatility for sure in the Aussie crosses as we head into the start of next week. And we'll be sure to give you an update on that. All right, so that is Euro Yen. Kiwi CAD, went over those. Okay, someone wanted Euro Oz. David, was that you? David Fernandez. Yes, Euro Oz, man. Let's take a look. Haven't checked it out yet today. I'm going to put this on the side here because if I miss an entry on that again, it's not going to be a good day. Okay, you're coming into, oh, he's looking for just euro dollar. Oh, I'm sorry about that, David. We'll take a look at both. Euro Oz is a very interesting pair because the Aussie weakness with Euro weakness has sort of been a difficult play. And while this thing looked like it broke the monthly opening range here on this move and a longer dated trendline support, we came back, tested as resistance. If this median line structure is in play, you should actually be looking for short triggers again here. So we'll go over this in a moment. But yeah, let's take a look at euro dollar first. Here's what the euro dollar looks like for you, David. The only thing I'm looking at is that basic trendline support extending off the yearly low, and it looks like we're just sitting on it. 618 didn't offer jack. We kind of sailed right through it. We came even through it on the overnight trade session, so I'm not really focused on that anymore. I'm focused on this trend line off the lows, and the break below that, you're looking for a basic 100% extension from the decline off of that August high. So key support 108.67. Today's lows is basically on that trendline support. What does the intraday chart looks like? Here's the 30. So, David, I mean, I want you to tell me what you're looking to do with this. I don't really have a setup on this. The opening range broke clearly on FOMC. There was obviously no entry on that. There hasn't been an entry in my estimation since. You dropped into that 88.6 at 109.10. You sort of bobbled there all night. You saw a quick recovery, but the only short that would have looked appealing would have been the one that we just missed, obviously, on this range. And that was a basic 38.2 retracement. And we'll actually keep the 0 there. So those are the sort of near-term resistance I would have been looking to sell at. That 38.2 did give us a nice hold. Let's see what the 5-minute looks like. Yeah, I didn't get much of a support trigger either. Some nice divergence into the highs, but there wasn't really a trigger per se to get in on this one. I'm looking lower. I mean, it's obviously a bearish trade here, David. It's just that near term, you could get a little bit more of a rebound off of that region just because of that major key support that we just talked about. Does that make sense? So the immediate focus, yeah, is for a bounce higher from here. But the broader trade, you'd look to sell that bounce. I don't think anyone's going to think that we going to reverse course here. In fact, this could be a very clean if it is 1, 2, 3, 4, 5 waves down, in which case you'd start to look for an onset of a correction. But even that, it should offer some nice short opportunities. Remember, this week was huge. I mean, the last 2 weeks have been huge for the euro. You broke back below the monthly open, the 100-day moving average, the 200-day moving average, the September lows. There's a lot of damage technically done. Now, momentum hasn't really gotten the deep stretch sub 40 that would sort of validate a broader turn. And remember, we've been holding 40 support since May. So I'm kind of just hands off on the euro here, David. You know what I mean? I hate to be so wishy-washy, but I'm kind of hands off here. I'd rather trade euro by way of euro yen. We'll take a look at euro Aussie in a moment here, but euro versus the dollar per se, I'm not really too keen on getting excited around here. Also, keep in mind that we just went over the dollar index is at resistance, so you could see this thing just show us a little bit more of a sideways flat movement here. Watch that high from September that we failed to close above yesterday. David says, okay, thanks. Got it. Right on, David. Again, let's take a look back at Euro Oz. You got me all interested in this now. Yeah, right on. So, excuse me. So, 100% extension off the high. If you look at that daily chart, actually caught it at 152.48. Let's just call it 152.50. That was the close low, if I'm not mistaken. I think I looked at this earlier in the week. Yeah, so that was the close low right on the bat. Nice confluence region. And I'll tell you guys this 9 times out of 10, my favorite setups are going to be 100% or a 1618 extension off the high, confluence with a 618, 50, 38, 2 off the low. These will tend to give you really nice reactions as you saw here on that rebound. So yes, the immediate focus is still for that rebound to possibly travel higher. I think on this one, you're seeing this parallel be sort of what we want to focus on. So near term, looking for short triggers beyond that region. Looks like we took a retracement off this yesterday on that stretch. The 50%, 153.64 holding as support, but broadly looking lower in Euro Oz. I just wouldn't be too crazy about getting into anything longer term, guys, with the RBA on tap next week, early next week. So the 2nd is basically Monday. Stay bearish below that trend line. Looks like a near-term support trigger might be in view as well. Something like that. So an interesting setup there on Euro Oz. Respect this median line structure as long as we stay within that confines. Mario Viveros, great to see you in the room, sir. Says, hi, Mike. Thank you for your levels on sterling yen report. I took 45 pips yesterday. My only concern at the time was it was 6 hours pre-FOMC. So that's why I put it out there, Mario, because when you're looking at a trade that you want to take ahead of a major event risk, the best thing to do, my man, is just to avoid that. Most of the risk on that was going to come by way of dollar crosses. Yen crosses always see somewhat of an interesting reaction just because of their relationship to yields and broader U.S. risk. But certainly sterling yen was a very interesting position that we were following earlier in the week. Here's what it looks like now, Mario, if my charts want to comply here. Sterling yen, sterling yen, sterling yen. Okay, so we were coming up against that median line parallel for the broader structure here off the highs. The intraday chart is really what the focus was going to be on, and basic break of the weekly opening range at resistance. The resistance isn't as clear here on the daily chart as it was on the intraday. Obviously, we're coming into the upper median line parallel, but if you look at it from this standpoint in the 30-minute, this was huge. This was huge. This was a nice 1618 extension. Whoops. 1618 extension off of the low. Excuse me, this is the 1618 extension off the initial advance off the low. The broader gave you 100% two equal legs up right into 8608, 8601. And that was the weekly opening range high. Your best use of the opening range strategy will be when the weekly, monthly opening ranges take place just above or just below trendline support or resistance. Those are going to be your best plays, because if you're at resistance and the opening range break happens to the downside, that's the reversal signal you need. If you're at support and the opening range breaks to the upside, again, likewise, that's going to be a double, two factors now pointing, two merits to give you the directional bias. And that's all we're looking to do for these scalps, guys. We're looking to load up as many technical factors that we can check off. Okay, momentum, sub 60. Okay, we're at resistance. Opening range broke to the downside. Check, check, check. Let's look for some short triggers. And that's how it all goes down. So the levels have been acting pretty well. You know, even though you see a lot of these sail throughs, keep in mind it's the pound, guys. So it's just notorious for doing this kind of stuff, throwing through support and pullback, the throw over of resistance, or you want to call it a false break or a throw over, whatever, whatever financial world you're coming from. The olden days, we used to just throw a throw over. But in any event, this is the kind of price action you see in sterling. It's typically really well known as an institutional traded market, so keep that in mind. A quick update on the levels here. Obviously, we held that support at 84 as a soft target from earlier in the week. So I'd be looking for that 84 handle confluence with the basic trendline support over the next day into the Asia Open tonight. And then again, the 50% retracement, 83.47. That is going to be the next downside target here. Okay, just going through some of your questions here. Sorry for the silence, guys. Christopher Hudson says, believe me, I was on top of the euro dollar during that time frame and it missed all of my triggers. So did the dollar yen, by the way. It just happens that way sometimes, Chris. That's the beauty of our strategy, man, though. There's lots and lots of opportunities throughout the course of the day. I never kick myself too hard for missing a trade because a couple hours you'll find a trigger somewhere else. We have so many pairs and so many options available to us that the market will always provide more opportunities, guys. Euro pound. Mario, I just want to make sure we're good on that. Any other questions? He says, I got in at 184 with a stop loss below London's low. Yeah, that's exactly how you'd want to play that. That's exactly how you would have wanted to play that. And actually, that was a really good trade. Why, Mario? Because, in fact, you had some really strong divergence with price action making a lower low. Remember, we always talk about the divergent signals. The closer the divergent signals are to the 50 level, in fact, the stronger they become, the more technically significant they are. So the fact that the divergent signal on that last low, or the divergent point, let's call it, as price action made a lower low, and again, we're only looking at the closes, right, guys? Price action at a lower low. The fact that the oscillator made such a higher low, close to 50, was a tell that you were seeing momentum really, really about to turn over. That was a great entry on that. Well done. And again, I appreciate the comments, but you're the one placing the trades, Mario. I'm just highlighting the market's levels for you, right? They're not my levels. I just find it as us looking through, doing some investigating to find the levels that the markets are reacting off. So look for a rally back into that median line parallel. This is going to be the invalidation for the immediate downside bias. If you do see a break there, expect a little bit more of recovery, but we will be looking for short triggers into that region. All right. He says, great, thanks. Hey, no problem, man. Always good to see you in the room. Mark says, Euro pound, I know you are still looking lower, but tagged the 618, 171.44 from July in the uptrend. Looking higher? Let's take a look, Mark. Euro pound. Ooh, this is pretty big, actually. So remember we were talking about, I don't remember which webinar it was this week, guys. By the way, all the webinars kind of mesh into my head into one throughout the course of the week. But we were talking about the fact that when you see a downside break of a descending channel, Mark, cheers, Tuesday. Mark has a better memory than I do. You see that can tend to be the sharpest part of the move. When you see a breach of an uptrend, that can sometimes be the strongest rally of the move. So you saw the beginning of the turn here, yeah, momentum holding sub 60. On the 50 break, look what happened in momentum. You saw a 50 break for the first time in basically a month and a half. It took us below the median line of the descending structure, and even an embedded one just off the recent high of the descending structure broke to the downside. And that opened up a decline from 71.70 basically into, or 72.70, basically 100 pips lower, 100 plus pips into 71.50, right? That's a lot, okay, for Euro pound. I know that doesn't seem like a lot, which is why I call this the grandpa trade, but that is a lot. The daily ATR, that's not a quarter, folks. That's a daily ATR of 65 pips. So we've seen a pretty big move. Mark wouldn't be surprised in the least to see a rebound off of this region of some magnitude. At this point, I would be highlighting major resistance somewhere in that same range where the 200-day moving average converges on that former lower median line parallel. That would be the bearish invalidation level, but I would still be looking for a rally to sell. Daily momentum coming into 40, again, could get a rebound off that region. Let's see what the intraday chart looks like, shall we? Let's just adjust these a little bit. Okay, so this is one of those times where you need to show some caution, Mark. And this is what I'll say, man. Um, from a level standpoint, you're coming into a nice resistant support target. 618 retracement. It's always going to be a level of interest. The key ratio, right, that everyone looks at. From a momentum standpoint on the daily chart, there is cause for concern on the short side. From the intraday momentum standpoint, Mark, still hasn't turned in my opinion. Still hasn't turned. Now on this pullback here, I call this a failure at 60, and we're coming from oversold conditions. So you would have wanted to see the 60 really show us a move like this, right? You didn't. On this pullback here, if we hold 40 in momentum and you get a 5-minute trigger to the upside, a stop against the lows could be a decent play. Could be a decent play. The target would be a basic retracement of the drop off. And you'd look for a move into that 50-618 range. Like this. That would be like 72, the 72 handle, 71.95. That's an area of which, again, you'd start to look for some resistance, possible stop against the highs for the week, possible stop against that trend line would be the way I would want to play it. But I wouldn't want to necessarily get long just because there's support. And that's a very good lesson for all of us, guys. And it's something that I hear a lot of people on Twitter, during the webinars. You're looking for support here, right? We're short. Our bias is short. We're at support. Should we take a long? Well, it could be a decent play, but I would still need the same triggers that took me on the short side. I would still need those on the long. Just because we're at support, it's not a reason to get long, right? A trade could come into support and sit there for a month. A trade could come into support and plow right through it and go lower. A trade could come into support and rebound right off. right? That's why we don't just look at levels. We have to also watch what's happening in momentum and price action, because price action is the best tell. It's the only indicator. I know it's tacky. It's the only indicator that'll never lie, though, right? RSI, stochastics, MACD, these are all backwards looking, right? They're telling you what happened, not what's going to happen. Now, they can be helpful, but just because the price is in support, that's not justification. So, Mark, I hope that offers some picture of where my mentality is with this. Yes, I could see a rebound from this level. Would I be playing the long? Sure, I could probably scalp a couple of positions on a long trade if it comes back and it gives me a long trigger against this low. But more than the preferred, the favored way to play it would to get a near-term rally here to get back on the short side, and specifically on the back of the euro, which has seen such a major decline. I'd be hard pressed to really get too excited about this position just yet. Mark says, okay, that's what I wanted to hear! Exclamation point. Thank you. Great lesson again. Hey, appreciate that, Mark, and always good to see you in the room, brother. Very interesting, though. Euro pound. We were all over this a little bit earlier in the month. Still looks pretty good. Still looks pretty good. That 100-day moving average, by the way, comes in at 72.04. Same region of resistance. 618 comes in at 72.08. So levels are clean, if anything. All right, so let's just touch base real quick on some of the commodities. Gold saw a huge day yesterday. Here's what the daily chart looks like. And we highlighted this trade on the radar chart just ahead of the Fed. And if I can find my chart, I'll be happy to show it to you. Here it is. So if you guys recall, I'm going to redo this analysis real quick just to kind of remind you where we were. So we were working initially with this pitchfork right off the highs. And if you took the swing low that you made back on Friday and that high that we made, or the swing low from Thursday and the high on Friday, you can see a couple of different things were panning out. And here's the radar chart, actually. Let me show it to you. Here's what we look like right ahead of the Fed. Right? And we were talking about this region, this pitchfork. The upper median line parallel was dead on with the weekly opening range, with the weekly opening range taking place right above support. So we talked about this just earlier this session. When the opening range is taking place just above support or just below resistance, those are going to be your best plays. This was 100% extension. It was also a basic 38.2 off the low. Price came and found support there on Friday. You saw a break above the median line, a break above the weekly opening range, and that opened up a target into 1175, 1178. We've plowed right through that before FOMC turned everything around. And as soon as we broke the median line, that invalidated the long side. The lows of the week, that puts us bearish. And this is a lesson in turning in the market, in a market turnover. And while there was plenty of scalp opportunities on the long side, you need to know when that long side bias is invalidated. And the first thing is the level that puts you bullish takes you out of being bullish. Doesn't mean we're bearish yet. The bearish signal for me came when we broke the weekly opening range low. That does mean you're going to forego some of the decline, but doesn't matter, right? We're looking for intraday positions. We're not looking to catch the bigger move. We're never going to catch the entirety of the move. As intraday traders, as traders in general, we're only looking to take snippets. The guys who are looking to play every single trade to the maximum range, catch the highs, catch the lows, these are guys who are chasing the markets. You're never going to beat the market. The market always wins. We're just trying to take little snippets of it. Okay, and the break below 1162, 1161 is what puts you on the bearish side for gold. So just wanted to give you a little update on how that panned out. I know we were talking about that right ahead of the FOMC. So this median line formation is done and gone. The one we're working with now is a little bit more of a deader slope, which tends to hold markets a little bit better. And that's off the high that you made from the 14th, the low from last week, and the high that we made just ahead of the FOMC yesterday. So you're looking at a basic channel support if you mirror the highs, okay, coinciding with the lower median line parallel, coinciding with 100% extension off the high. Two equal legs down takes you right here. And this is the next big support zone for gold heading into the close of the week, heading into the close of the month. So watch that region. If we crack 1147, there's really not much on tap. I mean, I have a soft target right here at 1141, but you're essentially looking for like the 618 at 1137. Huge move for gold. I mean, just massive, massive range yesterday. And a failure punched through that 100-day moving, 200-day moving average in reversal. So it does put you on a little bit more of a bearish path. Again, the 618 that we just looked at, 1137, guess what? 1138 is that outside day reversal that we made on the 2nd of the month. Outside day reversal close. Any questions on gold? Crude, nice little rebound there. It looked like it was sneaking below 43.52, and if you guys recall when we talked about this last month, or earlier in the month rather, I think it was last week, we said, look, if this thing came and broke or breaks below the monthly opening range, more importantly, 43.50, sayonara. Look for a drop into 41.80, look for a drop back towards that 39 handle. This is a trickster and a true form. I mean, you saw a close just below the close, just below 43.50. In fact, the stretch lows came just below the September lows before reversing course yesterday. So at this point, let's clean up some of these levels. This 38.2 is not going to be something we're going to want to pay too much attention to. Oh, so actually we don't need that retracement. And you'd look for resistance right at that median line that we're coming up against right now. I just want to see if there's a confluence fib level. Hey, look at that. 50% comes right there. All right, so watch 46.73 as near-term resistance. That's going to be the median line formation we've been holding throughout the course of the year, and also a basic 50% retracement of the near-term decline. On its face value, guys, we're only a bit higher on the month. Despite that huge spill we saw off the high, we're not that far off the monthly open, and we're still essentially holding the initial October opening range. So this stretch here that we made in the first 9 days of trade is the same range we've been holding all month long. So heading into the close of October, you never got an opening range break. Guess what? Here's a funny joke. We didn't get an opening range break last month either. In fact, last month's entire trade session held just within the confines of the first 2 days of trade. All right, so there isn't necessarily a definitive move here that we're looking for crude. It's still in this basic range, and until we clear that, treat it as such. Look at the momentum signature, and it highlights exactly what we're saying. Support ahead of 40, resistance ahead of 60, and really just hugging that 50 level. So keep that in mind here for crude. All right, I think I got through all of your questions, guys. If there is nothing else, we'll go ahead and wrap things up here. Thanks for everyone who attended today. I hope you guys have a great weekend. We'll pick things back up on Monday morning on Daily FX for the public webinar, and then here Tuesday, Wednesday, and Thursday, 8:30 Eastern normal time. Again, I won't be having an intraday update tonight, but we'll see if we can post some new radar charts on things we'll be looking into the close of the week. Lighten the load. Okay, as we head into tomorrow, specifically if you're scalping the yen pairs, you might have a lot of great opportunities. Just be a little bit lighter. The BOJ is known to just throw wrenches into things. I personally don't think that they'll do much, which can give us some yen strength, which is what we'd be looking for. But if they do come out with measures, just make sure you're ready, because there's likely to be a lot of volatility in the yen crosses. I want to wish everyone a awesome weekend, and we will pick things up back next week. Cheers, guys.